It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, October 20th, 2015. Cruising our way through another exciting week here in our nightly newsletter. Hope you guys had a great Tuesday. In tonight's newsletter, crude oil is range-bound heading into the highly anticipated inventory report on Wednesday, which means we'll be looking for failures to buy the lows and sell the highs tomorrow on the black gold. How about the S&P? The E-mini S&P is range-bound as well this evening. Quite a few ranges we're going to be talking about tonight. S&P is also range-bound this evening and completely balanced. Our plan is to fade the breakouts at the highs and lows using failure patterns while watching for traps at the highs of a phantom channel. You saw how well those phantom channels worked on last night's newsletter. Now we're going to see another one tomorrow on the S&P. How about the gold? The yellow metal is bullish with a short-term range this evening. Very interesting chart on gold tonight. We're looking for bear traps to buy the lows of this short-term range. It just showed up towards the end of the day today, and we're going to use those range expansion levels on gold tomorrow. We've got a great plan for gold. Euro, very low volume ahead of the ECB report tomorrow. Sideways is the name of the game on the euro right now. Very tight trading range ahead of tomorrow's ECB meeting tomorrow morning. What do they got? 8:15 tomorrow morning, I think is when the schedule is. We'll be hearing from Draghi around 9 o'clock. So our plan is to buy lows and sell highs, looking for failure patterns and range rotations tomorrow on the 6E. We get a plan for crude, the S&P, gold, and the euro going into tomorrow's session. A wacky Wednesday, a hump day here in our trade room tomorrow morning. Before we jump into our charts though for tonight's newsletter, I do want to remind you, make sure you're watching our video on our trading blog here at sidewaysmarkets.com. There are a few reasons why you should be watching this video on our trading blog. First of all, upper left-hand corner, you can grab a free pass, come out and test drive our live trade room as a guest for a day. If you're not a member here at School of Trade and you'd like a free pass to attend our trade room, upper left-hand corner. In the lower left-hand corner, you'll see a spot for your name and your email address to join our nightly newsletter mailing list. Now, you'll never have to worry about missing another newsletter ever again. Now, when you register for the mailing list, or if you grab your free pass, make sure you check your inbox. I'm going to send you a verification email. How about right below the video tonight? Right below the video, you can download all of tonight's charts. All the charts you'll see in tonight's video, you can download those and have those on your computer for tomorrow. And then over here on the right-hand side, you can learn more about joining as a trial member, learn more about membership information. And don't forget, I've always got someone standing by 24/7, 365 to give you guys a hand. Hope you guys are having a great day so far. We had a fantastic day. Nice, juicy, range-bound market across the board here tonight. And we got a plan for you guys going into tomorrow. A lot of stuff going on tomorrow. We got crude inventories at 10:30. There continues to be rumors of this little hidden meeting from with OPEC tomorrow. We'll know right away on the price action tomorrow morning. I haven't seen much on the news headlines as far as this, from what I keep being told, is this hidden meeting tomorrow. Well, we'll see what happens tomorrow morning. We know we definitely have the inventory report tomorrow morning at 10:30 a.m. And then we have the ECB report, the ECB meeting tomorrow. And that, of course, is why you're seeing the gold and the euro trading such range bound here late in the session. Let's kick off crude oil here. Crude oil is range bound heading into the inventory report on Wednesday, which means we're looking for failures to buy the lows and sell the highs. Volume is completely balanced. This is actually a very good example of a volume profile here that shows this balanced market. It doesn't look very balanced. As you can see, it looks like we have a definite bearish market here, but we'll be watching here for this push down after that API number came out to snap right back up to that range high around that 46.60. So volume is completely balanced. This major bear channel is considered, at this time, it's considered a phantom channel. So we'll be looking for sellers to fail at the highs of that channel on the way up to those range highs as price rotates from low to high and high to low. We're also going to be keeping a close eye on the two-try rule. You can see sellers have definitely tried twice. That's a double press low. And of course, if they continue to keep price below the 46.16 ahead of tomorrow's inventory report, we'll have no choice but to be a bear. So as you can see on this chart right now, again, the volume really is what is what I think is going to be your most important information right now. That volume, very, very balanced. That means as this price goes lower, we're going to look to fade the breakout back higher. As the price goes up, we're looking to fade the breakouts back down. The original trading range this morning was at 46.57 down to 46.16. So that's going to be our ultimate line in the sands here. But we know, though, looking at this a little bit larger, we can see this has gone down one deviation down, 45.75. So really at this point, you can look at this as one big range from 46.57 down to 45.75. Bottom line right now, until something changes, we're going to continue to fade these breakouts. So what that means is, again, you can see we got two tries with the sellers here, but right back up inside that range. As long as we're below this 46.16, the sellers are going to keep trying to push this price lower, and we're going to keep looking for those sellers to fail, right, to buy it back up. Now, remember, the inventory report throws a big wrench in this tomorrow, so as of 10:30 tomorrow, we're going to be sitting on hands, wait for that news to come out, and then we'll have to play this by ear based on what we see for tomorrow. So most important thing right now is as this price goes down, we're looking to fade it back up, expecting a rotation back up, and this is where that channel comes into play. This is where this channel comes into play. Now remember, we talked about this last night. When you know we have a range-bound market, these larger channels, I'm not talking about the smaller channels, these are those larger channels. This is what we call the phantom channels. And basically what you're thinking is you're going to have sellers trying to sell those channel highs. When they fail, we can buy that failure to complete the rotation back up. This is an example of a channel that's going to be a little more difficult to use. We saw some great examples last night on gold and the euro regarding those phantom channels. If you missed last night's newsletter, last night had a really good example of phantom channel on gold. So bottom line is we are expecting to see some sellers entering the market at the high of this channel. And again, depending on how much room we have, looking for buying opportunities to complete the rotation. So right now, two tries down, right? Double push down by the sellers. As long as we can make it back above that 46.16, we should have no problem rotating all the way back up to those highs. And then, of course, up to those highs, we'll look for the price to fade and bring it right back down. So as this price goes lower, we're looking to fade it back higher. As this price goes higher, we're looking to bring it right back down. And again, depending on when we hit the high of that bear channel, again, at this point, it's a phantom channel. We'll wait and see if they want to respect it. Because you can clearly see there's a little bit of a bearish tone to it. But again, the volume pretty much says everything we need to say right now. It's very, very balanced in that volume profile. So again, this spike down is fresh off the API number at 4:30 this evening. So we'll definitely be expecting these sellers to try and fade that buy, right? Fade that breakout back up into that range. And we're targeting that range rotation. And then once we get back inside, fade those highs, fade those lows. Again, every time we break out, looking for seller failure at the lows, looking for buyer failure at the highs. And we'll continue to do this until we get that second try, right, and keep going and stay out of this range here on Crude for tomorrow. Don't forget, if you're trading Crude, we'll be opening up the trade room tomorrow morning at 8 a.m. Would love to see you guys out there trading it with me. How about the S&P? Another range-bound market. Now, this is a market that has a phantom trend line that we can definitely sink our teeth into on this one. As you can see, volume profile here, very balanced right now. We can see a flat moving average going through the middle. That tells you to be looking for the trading range. I can see the trading range going from 27, we'll say that 28, down to that 20.5. And of course, we have that major channel going right on through the middle. Again, when you know you have a range-bound market, these channels become phantom channels. We're going to question their substance. We're going to question the validity of these channels. So we expect to see channel rotation, and that's going to be your first clue, right? So we rotate from the high down to the low, back up to that high, try to go down to that low. If we can't make rotation down to that channel low, that's just screaming at you to look for the sellers. Let them try, right? Don't just guess. Let those sellers try. And then when they fail, you know where it's going. It's going right back up to that range high, right? So again, as this price goes lower, seller failure, buy the low. As we go higher, buyer failure, sell the high, range rotation, range rotation. And until we see that two-try rule from the buyers or the sellers and then stay outside this trading range, this is going to continue to be a range-bound market. So E-mini S&P range-bound this evening, completely balanced. Our plan is to fade the breakouts at the highs and the lows using the failure patterns while watching for traps at the highs of that phantom channel. We will look for sellers to fail at the range lows for buying opportunities and buyers failing at the range highs for selling opportunities while price rotates back and forth inside of this trading range. Also, don't forget to keep an eye out on the two-try rule tomorrow. We saw a great example of that on Crude today, intraday, and had a great sell right off that high. So a beautiful, beautiful range there on the S&P. We're looking forward to another exciting day tomorrow on the S&P, that's for sure. Now, moving here to the gold. Very interesting market here on the yellow metal this evening. Very interesting scenario here on this yellow metal. Looking at this as a bullish market right now with a short-term trading range. Gold is bullish with a short-term range this evening, which means we'll be looking for bear traps to buy the lows of the range as well as the range expansion levels below. The bull channel combined with the volume profile clearly defines this bullish market, and the recent trading range gives us an easy location to look for sellers to try and fail tomorrow. So a couple things in this chart. Again, you can see the volume profile definitely weighted towards the high side. We're definitely seeing a lot more volume up around those range highs. Volume is like those votes being casted for the direction. So we can definitely see a market that is significantly weighted here to the bull side. That doesn't mean we're going to go straight up. That just means we definitely want to stay to the buy side right now. Throw that on here also with a bullish channel. Right, that bull channel you can see here has now broken. We'll see if some late adopters want to come in and finish off that measured move. Remember, during trending markets, we're always looking for measured moves. We're always looking for channel rotations. And then that's why I said this is a very interesting chart here. We don't see this very often, right? You're probably thinking, boy, we don't see this scenario quite that often. We really don't. Not at least on these anchor charts. But here we have a bullish move going higher now into a trading range. The directional bias, right? The direction going into that range tells me I'm a bull, and I can use this trading range now with a bullish bias. And what that means is, that means that we expect to see price rotating inside this range. With that bullish bias, though, our number one priority here, if we break to the downside, is to look for seller failures to buy it back up. And then if we go higher, this is the tricky part. Fading the breakout to the downside is relatively easy. A lot of people can kind of think that through, right? So we go lower, we see sellers try twice and fail. We buy that failure. Bullish bias, trading range, right? Fade the breakout. As we go higher, though, that's where things can get a little bit interesting. We go higher, we're probably not going to get such an easy move just buying the pullback. So what you want to do is you want to look for the price to break up to the upside, and then as this price pulls back, use seller failure to buy that seller failure as it goes. A little bit more rock solid opportunity there to be a buyer. So once again, bullish market. The bull channel tells me keep an eye on those measured moves as we go higher. The volume profile tells me definitely keep looking to be a buyer. And that trading range with our bullish bias tells us right now, fade the breakout using seller failures, the lows. And then remember, the tricky part is if we break to the upside, normally we're not going to get it just as easy as just buying, the 79.6. Not on these larger term time frames. So what we'll expect to see tomorrow is or at least the most reliable profit will be made looking for seller failures again, right? Range-bound markets and counter trend in this trending market, looking for those failures, right? Love failure patterns because they're always the easiest way for you to get a nice short-term target filled. Stay to the buy side. Look for sellers to fill at the lows. Look for that breakout pullback at the highs with seller failure to trigger your entry long on the gold. And then what are we going to do with this euro? At first glance, I thought I might have the wrong front month contract. We're not trading the 316. I can't even believe I'm going to say that. The March 2016 contract, I don't believe that. This is the 1215, obviously. We're not quite to March 2016 yet. But look at this chart. Where's the volume? Exactly. Where is the volume right now? Everyone's clearly waiting on this ECB meeting tomorrow, and we clearly have a balanced market on this euro going into tomorrow's ECB report. Tomorrow morning, we're going to hear from the ECB right about 8:30 a.m. Draghi will hit the microphone doing his whole song and dance, his press conference tomorrow morning around 9 o'clock, 9:30. So you're going to see some volatility tomorrow. Keep an eye on this trading range. The euro is sideways, trading inside a range ahead of tomorrow's ECB meeting. So our plan is to buy lows, sell highs, using failure patterns and range rotations. I know, right? I sound like a broken record right now. I probably could have taken the rest of this video off and just said, do the same thing on the euro, but I'll finish my job here for you guys and gals. The volume profile clearly defines this balanced market. So we're looking for sellers to fail at the lows and buyers to fail at the highs. We're going to use those range highs. We're going to use those range lows. And then don't forget, we're going to use these range expansions, right? Range highs, range lows, and then range expansion levels to fade these breakouts, right? So range rotation, range rotation, range rotation. Oh, we break out, buy the low. We break up, sell the high. Now, the most important thing ahead of news tomorrow for this ECB announcement is going to be the two-try rule tomorrow. Remember, once we see either buyers or sellers try to break out twice and stay outside this range, I'm looking at you, members. If you're a member of mine, you know exactly what I'm talking about. We talk about it throughout the entire course materials here at School of Trade. So that's the one thing you got to really be kind of watching for tomorrow. Once we see that second attempt from the buyers or the sellers, and then we blatantly stay outside that range, that's going to be your cue to follow that direction. We won't know that tomorrow until probably after we hear from Draghi, I would imagine about 9:45, 10 a.m. But before we hear from Draghi in the press conference tomorrow, we should be okay to fade these breakouts. Again, looking for seller failure at the low, buyer failure at the high, and then using these range rotations, range expansions, right, for your best opportunities to take your profit targets. Guys, really simple strategies here right now. On the euro, we're completely sideways, right? We're fading highs and lows. On the gold, nice example on gold of a bullish bias to that trading range. Would love to get a trap low from these sellers, right? Get these sellers to start beating their chest and then buy right into those stop losses when they fail. The S&P, very range bound here right now, but as you can see though, that bear channel giving you a nice phantom trend line to use. Don't forget on the S&P, keep an eye on the undershoot. If we get an undershoot of that channel before we go up to the channel high, oh baby, just pay me now. Just pay us now. And then of course on the crude oil, I'll tell you, the crude really looks to be the most difficult of these markets right now. We're expecting to see this market finish the rotation back higher here. But again, with that major bear channel, it might get a little bit funky up here because as you can see, look at this one. It's going to be a little bit difficult to use that phantom channel high as compared to, say, the S&P 500, where there was a big difference between that channel high and that range high. And remember, tomorrow's inventory day, so it's going to be early in, early out, right, sitting on hands at 10:30. Then after 10:30, it's really gambler's hour, from 10:30 to noon tomorrow ahead of inventories. Guys, don't forget, I know I talk fast on these newsletters. I want to make sure I get it all through with you guys here without taking up all of your evening. But we trade all these markets live in real time tomorrow morning. Come out and see me. Come out and see me. Grab your free pass. Join the newsletter mailing list. Download your charts for tomorrow. And if you got some free time here, head over here to schooloftrade.com. Check out our free trial. I take a lot of pride in the fact that we have the best free trial in the business. We have 3 levels of membership here at School of Trade, and we always have someone standing by 24/7, 365. There's no such thing as a question too big or too small to help you guys out. I would love to help you guys launch a successful and effective trading career here with schooloftrade.com. Thanks so much for being here. My name is Joseph. Boy, oh boy, oh boy. Tomorrow should be an interesting day. We got ECB, we got inventories, and never a dull moment in these commodity markets right now. I'll tell you that much. My name is Joseph. Thanks for being here. Thanks for being great people. I'll tell you, this is my favorite part of my job, getting to help new traders launch their career. It's always great to have you guys here with me every day. Don't forget, send me feedback. I'm JJ at School of Trade. Give me a thumbs up on the video. Post a comment on the YouTube channel. Share this information with a friend. And I'll see you guys at 8 a.m. tomorrow morning in our trade room. If not, tomorrow evening, same time, same place for the newsletter. Be well out there, boys and girls, and be nice to each other, will ya? I'll see you next time. Adios, amigos. Bye-bye for now.